let's jump into things. Where are we at? It is 9:15, or so 9:17 on 23rd of Jan, so Friday. And metals. Look, there's literally just no words. I mean, if we zoom out on this and sort of go, okay, look, here we go. We had a bit of a channel, obviously sort of sitting up against the sort of resistance here. It's a second time here. It has really just gone absolutely berserk this week. And again, overnight. You know what I mean? Like we had that little bit of a sell down yesterday, and it really looks like okay, finally maybe we're going to get a little bit of a sort of pullback over here. We put this onto maybe the 1 hour. Yeah, look, that 1 hour level here. It was doing what it needed to do, get down here, but again, this is the kind of thing we're looking for, sort of where basically unable to close through this zone. It kind of held it a few times, and then sort of really from end of Asia kind of moved up, typical sort of like quietness around the European session. But once we had that data out from the US, which didn't seem too bad in terms of sort of what the data were. You had PCE and also sort of continuing sort of the weekly jobless numbers. They weren't too bad, but it did not matter to the market, and they absolutely dumped the dollar. And again, we're seeing this just this typical sort of let's get out of the dollar flows. Where we're going to go. Metals are the sort of winner here, and particularly gold. Been seeing gold actually for the most part of the week sort of outperform silver in this regard and that. And bang, 4,900. Look, there used to be a point where you sort of be like, wow, it's going to go tick over a different hundred. Now it can do a couple. I mean, what have we done this week? This is literally Saturday morning here, so call that Saturday. Well, it was Saturday, so less than a week. Where are we at here? From that wick to here, that's call it pretty much 9%, but it's 400 $400 in literal less than well, it's about 6 days actually, because I think it was about sort of 6 a.m. or so on that Saturday morning, 2 o'clock on the Saturday morning. So yeah, it's absolutely ripping. Two new highs. I mean, look, can you say anything else other than okay, yeah, it's going to 5,000? I mean, that seems to be pretty much what everybody would be sort of looking at. But I sort of thought about this as well, sort of like when we were at, let's drag this across a bit, when we were coming through 3,000, 4,000. Excuse me, it's kind of like, oh wow, surely that'll be the high, but it really kind of doesn't tend to be. Like, you know what I mean? It's not like it hits this magic. You will certainly get some people jumping out, and most likely what will happen is you'll get to like sort of like 4,992 or something like 4,493 or whatever around here, and people try to get ahead of the sort of perceived sort of 5K profit taking line. So you might have a little bit of pushback, 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 but I imagine it'd probably come up and they'll just go bang, and sort of like we'll probably almost sort of say 5,100 pretty quickly after that as well. It just tends to be these sort of things when you sort of go, okay, yeah, here's a big round number, like, and this being an even bigger round number than obviously sort of just 49 or 4,800 being the sort of the next 1,000, which is US as well. So with a rule of thumb about 1.5, but yeah, so it's about sort of 7,500 Aussie. So it is absolutely thumping through to the top side there. So yeah, obviously closing on its highs. If we get onto a higher time frame, you can see that this thing is really just sort of chunking up here. RSI is not really sort of it's turned up. It's broken higher. So yes, you do technically have a negative divergence, but one thing that we've come to learn, and that particularly with the metals, gold and silver, is that negative divergence don't really mean anything. I mean, silver's been negative divergence on multiple time frames for like, last, I don't know, weeks, months, this kind of thing, depending what time frames you put it on. And it doesn't really hold a lot of weight to it all. So, if this thing is going to come back down, look, I would say because it's so bullish, maybe at the best you sort of hit the tops of these wicks, and then you see a launch up through there. Generally, sort of with these things, what we're sort of seeing is, as you can see, this is that little sort of a range compression that we had on the Monday. And if you look at the video there, I said, look, this is the close here. Either I thought actually we'd get a bit of a pullback here, so it was missed the boat with this one here. But I thought we might get a pullback to reload to then sort of come up. But as you can see, structurally, here's your range, here's your break, here's the next range, but it's not really even doing the back tests. yesterday it did have that big sell down after Trump had sort of gone on about not putting tariffs on the EU, and also sort of not what was it? Yeah, basically not invading. Not that he was ever really going to invade Greenland anyway, but that whole sort of situation kind of like abated, and price pulled back down from it. Nothing really much more had changed at this point, but they sort of jumped back on the bid on gold and up through the top side there as well. But as I sort of say this as well, he actually just came out with another tweet. Just had to find that one. But as we know, tariffs are big movers with gold. This is the tweet that just came out, or maybe came out a few minutes ago. I took a screenshot of it, kind of thing. But Trump says 25% tariff on anyone dealing with Iran will take effect very soon. I mean, this is the playbook, isn't it? I mean, even with this whole sort of Greenland situation, threat, 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 and then pull back, and he gets kind of what he wants, and then it's better than nothing. And everybody's like, okay, fine, fine. We're happy to take this lesser deal. So, you know what I mean? It's really just put this underneath gold and bang, we're kind of looking like this could probably push it definitely to that sort of 5,000. We'll see how we go. We've got half an hour on that. Market reopens. See how much this sort of takes effect in that if they want to gap it and then run it. But certainly, you can't do anything other than just sort of buy dips on this sort of thing at the moment. I mean, structurally, these things through these ranges, they are working, particularly when we find the range. We look for the close outside. Obviously, we tried to get that on the Saturday morning, dumped down, and that was just rocket up to that. Bang, same sort of deal here. Close above 80. Well, you have to sort of say which it is now, 46.80, because we are now 49.40. So, what's that, sort of $250 on from that point there as well. Anyway, enough of all the bigger picture of it all. Look, it's closing up on its highs. We've now got that other headline that's just popped out. I wouldn't be surprised if the thing gaps up in that. Pretty much when you're this close to these sort of targets, I wouldn't be surprised if that's the destination for gold to go before we see any potential pullback. As I said, I wouldn't be surprised if we see some pushback earlier, but it'll just be people trying to get ahead of the $5,000 profit taking dump, psychological level, yada yada. I imagine to sort of pull back down here. And if we see a sort of the trade through that period is if we sort of see a pushback from the 90s and then comes along and builds some sort of base like this, that'll be the trade there. And I wouldn't be surprised if this sort of like popped through and even sort of quickly moved towards sort of like, towards 5,100 as well. It's hard to sort of think if there's anyone left with stops to sort of say, hey, we'll hit the stops. But so I would say pretty much what you're just sort of looking at is people just basically just, profit taking. Flip across to silver. Silver bounced back, like again, very strong. I was looking sort of like for this continuation. It really sort of closed quite well here. And then had a second effort and then sort of pulled back up over here. But, as you sort of said, sort of back above sort of these sort of 94 levels, there was a good chance we were going high. It actually sort of looked like it wanted to dance around here a little bit. But as you can see, the movement with silver, I mean, look, it's at all-time highs. You can't fault it. But the movement with silver compared to gold, gold's just straight up with it all. Silver is, following suit, but it's certainly not sort of leading the charge as gold is. I mean, silver's big one is 100, which is within, a grasp of. I mean, after the pullback from yesterday, the lows that we got there were, up, 6% from the lows, even more actually, because technically that's your kind of low overnight, isn't it? Almost 7%, which is a massive, massive move. I mean, if you go another 7% on here, takes you 102. So, it's not to sort of say that it will. And the fact is, with silver, it does seem to be lagging gold a little bit. So, again, you can't really sort of do too much other than sort of look for sort of like little pullbacks, basings, and then sort of continuation moves with these. But certainly, gold is very much in charge here at the moment. So it does seem to be finding a little bit of resistance into close, but as I said, if gold runs, I would imagine sort of silver will as well. Moving along, we've got Aussie. Aussie just really broke yesterday and didn't look back at all. So, this was the trade we were looking at the other night. It was that breakover. Okay, we got the pullback through here. This is where we had what's called the job starter yesterday, and that was a massive beat. And it wasn't just a massive beat on the jobs added because like jobs added, yeah, it flies around so much. So, you can really only pay so much attention to how much weight that actually holds. The unemployment rate, I think, is generally what is a bigger sort of driver of the two in that sort of respect, and that obviously that beat quite strongly to the downside. So he's expected at 4.3%, came in at 4.1%. So meaning basically that people are still hiring, obviously by more jobs created. Unemployment's going down, so obviously less people sort of getting booted from jobs. So the economy in the jobs front is quite strong. And with the question of, okay, are the RBA going to hold or hike, because they're the real two options they're looking at the moment, their view, just based on the jobs data, is that it's, well, you know what, people are still hiring, people aren't firing, so people are obviously making incomes. Businesses are still doing well enough to be hiring all these people. Maybe we can hike the rates. They could probably withstand a hike, a sort of bit of a push up in the interest rates. And if that were solely the case, then okay, yeah, the hike would be on the board. But of course, you need to consider, or the RBA needs to consider the dual mandate, and the other one being inflation. And of course, we got quarter on quarter coming out, I think next week. And that's going to be, I mean, that's what Bullock was going on and on about for, the last couple of RBA meetings, saying that that's the big measure. And if we see that inflation, excuse me, is still quite high on a quarterly basis, then the way that they combat that inflation, or that, excuse me, that high inflation, is to hike rates, because it inspires people. Well, maybe inspires. I don't know. It gets people to sort of like hopefully sort of leave the money in the bank a little bit more, so less money in the circulation, but also makes it a little bit as unappealing or more unappealing for people to borrow. And obviously, if people don't borrow so much, again, less money in the circulation in the system. In theory, inflation would reduce because there's less money to go around. People can't increase their prices at such a sort of strong rate. Like, it's not disinflation, so you're not seeing prices coming down, but you're sort of seeing just sort of like a slowing of inflation. And so that's why the quarterly is going to be very important, because you've got a big tick in the, okay, in terms of the jobs, they're strong. People are hiring. People have got jobs. They're making money. We can afford to potentially sort of hike rates a little bit, and it won't sort of like, it's not like half the, well, not half, but you know what I mean, 4.5, 4.6%, and moving in that high direction, sort of unemployed. So it falls back onto the emphasis falls back now onto the inflation. And if the inflation is high, well, that's another tick for let's cut. Let's hike. And we've got one just coming up, obviously, in February, so that's probably looking like a hike would be on the cards. The flip side of that is that inflation on a quarterly basis comes down. The argument for that is that we did actually have the month on month previously, which did come down. Still sticky, but it did come down. So if it comes in lower, then inflation's not so much of an issue. It's like, do we want to cut? Oh, sorry, do we want to hike too early? RBA is very notorious for acting too slowly on things, and I don't think that's about to change. But of course, as you can see, with the jobs numbers coupled with the weak US dollar, Aussie, bang, big beneficiary of this thing. And we are looking to just rip higher and higher. So again, look, these sort of things, it's just going up, up, up. Never really retested anything yesterday. It actually came up the top of whatever this would have been the channel here, and then it just accelerated off here again. So even if we carry this through, like it's just on into its own little, vertical, basically. Here, you can't even, that's not even really a sort of angle here, but pop it in just because that is what it's trading at. Um, yeah. When things get this sort of steep, I kind of like, yeah, it's not really something you can sort of measure with a sort of technical level with it all. Look, any sort of pullback down here, similar with gold and that. I mean, obviously, no, Aussie's going to, one of the factors with gold, with Aussie is that it's going to run off gold as well and metals, and they're obviously absolutely screaming to the highs. So very much working in favour for the Aussie at the moment. So you can bang a couple little zones down over here, put it at the top of the wicks because, with something that's so bullish, I wouldn't be surprised if the first chance people get to sort of get back on board or close out any sort of potential shorts, if they didn't sort of take them through here, they're going to jump back on board here. So look, I wouldn't be surprised just the fact that it's just gone straight up. Pretty much that's the open of the week. Where are we at here? So I mean, even this for the week is up, 172 points, better part of 3%, which in FX terms is massive. You get a little bit sort of like. I don't know, you lose track of things looking at sort of, silver moving 5 or 6% every day. I mean, these sort of things, even gold was, I think, 2% or 2.5% or something yesterday, 10% on the week. Like, these are just crazy, crazy numbers. But keep in mind, 3% in 1 week for an FX pair, and particularly of FX pairs, Aussie, or any FX pair, but, Aussie's not a notoriously sort of super fast mover, is very fast. So, look, I wouldn't be surprised if this does have some sort of cooling around this area over here, but, seems like 68 was pretty much just, look, they tried it a few times and then just ripped it even higher. So I'm keeping an eye on the dollar to see what they do with that there. That's looking pretty precarious. And if the dollar keeps falling down, while we've got the market sort of like trying to price potentially a hike with the Aussie, then and metals still going to the top, I think Aussie's still got some sort of upside in it to go for sure. Speaking of strong Aussie, you look at Aussie yen. This is like this big red line here. If you look at this on a high time frame, I mean, we got up high here. We got up to 109 when the intervention happened from the BOJ, and they absolutely dumped across the market. But apart from that, if you jump right, this is on a weekly, we sort of tipped into these areas in, what's this, '07. We're above this now. So really, apart from intervention period, this is the highest it's been since 1991. So the yen just continues to get absolutely battered. And as you can see here, a big, big sort of push with Aussie yen up over here. So a big question about sort of like everyone's looking at UJ, US dollar against the yen. But of course, if they sort of intervene, if the BOJ do actually intervene, and we've got the BOJ today, actually, so that could be potentially, a bit of a driver of things. If we do see the BOJ intervene, it's not just going to be to UJ. As you can see, Aussie got absolutely hammered. This is on a weekly, so it's 1, 2, 3, so 4. That's still 5 weeks there. But in 5 weeks, it lost 17% once that started to take effect. Now, is it going to happen the same? Who knows? No idea. I mean, obviously it'll come about the same over here, but that's a big pullback if that were to happen. I think there's a lot of speculation around it. People look at 160 on UJ. Just have a quick look. Where is it at the moment? UJ is at 158.38. So, it is really sort of getting up into those levels there. We've got, as I said, we've got the BOJ rate decision today. So, may sort of see some fireworks with that. And finally, just have a quick look at the dollar, because the dollar really just, it was working, it was looking good, it hit push, and then of course we had all the sort of debacles of the Greenland and the tariffs, and now we've got more tariffs about the Iran sort of stuff. It's just, it's almost sort of like they see it moving and they think, hey, look, we need to do something to stop this. I mean, it's already absolutely on its arse. But if we have a look at this on lower time frame, what I was looking at yesterday for the 4 hour was to hold this area to get a little bit of a push up. I thought it still had another hurrah in it. Obviously, sort of once it really gave up that sort of 98.60, 98.70 level, it just melted. And it just got worse and worse and worse, and obviously just closed right on its lows here. So closing right on its lows through the wicks of this area here, I think you sort of have to sort of look at sort of 98.17, 98, sort of 20, this kind of area here. Should that break, then you're coming down to these lows over here, and then obviously underneath there, that's pretty much all she wrote for this little push here. It's the same sort of structure. So this little wick here is equivalent to this large base that it made over here back in December. So if it breaks this one, we're looking at a test of down here. You probably will find some sort of rally over this point here, but maybe this comes down, gold goes to 5,000, we see a rally effort. I don't think it's going to be enough to save it. And certainly if you break this level here, it's the same as breaking this on a smaller time frame. We then look down to the bigger structure down here at 96.40, which is really kind of, warning bell signs for the dollar on a sort of larger picture. Like I've been in the camp of, okay, we're going to get a rally, and we were doing quite well for a point here. But obviously, as we've sort of seen, this has just been an absolute debacle of a week. I mean, the dollar has just been bashed and bashed and bashed. So look, I mean, at the moment, it's within this kind of wick area here. We'll see what happens. We've got a couple of hours till that opens up. But I think with metals on the front foot, I think dollar's just going to continue to sort of get hammered here. We're seeing sort of rates that are holding above 420, the 10% US, sorry, the 10 year is holding above 420. But it doesn't seem to be mattering with the dollar at all, and it just continues to sort of get sold off across the board. And this is why we're not seeing any sort of pushbacks. It's not like sort of break and retest, because they are just dumping the dollar at all costs and that. So yeah, and from the dollar perspective, I think 98.20 is going to be an interesting area. We had a bit of support here. This is the breakout of this channel. The channel, what I mean, it did okay, but really, I think in the scheme of things, it only just came up to like the 50%. We drag that up here, a bit past the 61%. So 61%, and then bang, it's driving back down here. So I think really this is the area that it needs to hold. If it can't hold here, then I would say, things are going to break quite quickly after that as well. And really, you're looking a big move back down towards sort of 96.60 on a higher time frame there. All right, that's it from me.